What's up, All Roads fam? Today, we're tearing into why Bitcoin, the so-called crypto king, is headed for a big fat zero. Get ready for some hard truths. Let's roll. Why Bitcoin's value will plummet to zero. Bitcoin, launched in 2009 as the world's first decentralized cryptocurrency, promised a financial revolution. Its proponents hailed it as a hedge against inflation, a borderless currency, and a defiance of centralized control. Yet despite its meteoric rise and cult-like following, Bitcoin's inherent weaknesses and external pressures signal its inevitable collapse to a value of zero. This essay explores three critical factors driving Bitcoin's demise: its technological obsolescence, intensifying regulatory crackdowns, and the rise of superior alternatives. Technological obsolescence, a flawed foundation. Bitcoin's blockchain, while groundbreaking at its inception, is now a relic in a rapidly evolving technological landscape. The proof-of-work consensus mechanism, which secures the network, is notoriously energy-intensive. As of 2025, Bitcoin mining consumes electricity on par with entire nations, with estimates suggesting it accounts for over 150 terawatt-hours annually, roughly equivalent to the energy usage of countries like Argentina. This environmental toll has drawn sharp criticism from governments, corporations, and activists pushing for sustainability. As global policies increasingly prioritize carbon neutrality, Bitcoin's energy demands make it a prime target for restrictions, driving up operational costs for miners and undermining its economic viability. Beyond its environmental impact, Bitcoin's technical limitations hinder its scalability and utility. The network processes a mere 7 transactions per second, a snail's pace compared to modern payment systems like Visa, which handles thousands. This bottleneck results in high transaction fees and delays, rendering Bitcoin impractical for everyday use. Its fixed supply cap of 21 million coins, while designed to ensure scarcity, creates a deflationary trap. In a growing economy, a capped currency discourages spending and fosters hoarding, stifling its role as a medium of exchange. Bitcoin's rigidity, lacking the flexibility of fiat currencies to adapt to economic shifts, makes it prone to speculative bubbles and crashes. These structural flaws erode confidence in Bitcoin's long-term prospects, setting the stage for its decline. Regulatory crackdowns. The noose tightens. Governments worldwide view Bitcoin with growing suspicion, and their regulatory responses threaten to choke its ecosystem. Cryptocurrencies, by design, operate beyond traditional financial oversight, enabling illicit activities such as money laundering, tax evasion, and ransomware payments. A 2023 Chainalysis report estimated that over $3 billion in cryptocurrency transactions were linked to criminal activity, with Bitcoin dominating due to its market share. This association has prompted decisive action. China, for instance, banned cryptocurrency trading and mining outright in 2021, citing financial instability and environmental concerns. Other major economies, including the United States and the European Union, have followed with stringent measures. In the U.S., the Securities and Exchange Commission and the Treasury Department have imposed rigorous Know Your Customer, KYC, and anti-money laundering, AML, requirements on crypto exchanges. The EU's Markets and Crypto Assets Regulation, fully implemented by 2025, mandates licensing and compliance for all crypto service providers. These rules increase operational costs, deter institutional adoption, and reduce market liquidity. Smaller exchanges, unable to comply, face closure, while larger ones pass costs to users, making Bitcoin less attractive. A coordinated global crackdown could render exchanges inoperable, stranding holders with inaccessible assets. As governments tighten their grip, Bitcoin's decentralized dream becomes a regulatory nightmare, pushing its value towards zero. Bitcoin's dominance is further threatened by the emergence of more efficient and stable alternatives. Newer cryptocurrencies, such as Solana and Cardano, leverage advanced consensus mechanisms like proof of stake, which are faster, cheaper, and far less energy-intensive. Solana, for example, processes up to 65,000 transactions per second at a fraction of Bitcoin's cost, making it a viable candidate for real-world applications like decentralized finance and smart contracts. Ethereum, post its 2022 upgrade to proof of stake, offers similar advantages, further marginalizing Bitcoin's clunky infrastructure. More significantly, central bank digital currencies, CBDCs, pose an existential threat. By 2025, over 100 countries, including major economies like China, India, and the Eurozone, are piloting or deploying CBDCs. These digital currencies combine the benefits of blockchain, transparency, and security with the stability of government backing. Unlike Bitcoin, which is subject to wild price swings, its value fluctuated from $69,000 in 2021 to below $17,000 in 2022. CBDCs offer predictability and trust. For businesses and consumers, the choice is clear. Why rely on a volatile, unregulated asset when state-backed digital currencies provide seamless integration with existing financial systems? Bitcoin's lack of intrinsic value exacerbates its vulnerability. Unlike gold, which has industrial and cultural uses, or fiat currencies, which are underpinned by government authority, Bitcoin's worth hinges solely on speculative demand. As newer technologies and CBDCs capture market share, investor confidence in Bitcoin will wane, triggering a downward spiral. The network effect that once propelled its rise will reverse as users abandon a shrinking ecosystem. Conclusion: an inevitable collapse. Bitcoin's journey from a libertarian fantasy to a mainstream asset has been remarkable, but its flaws are catching up. Its energy-hungry, inefficient technology cannot keep pace with modern demands. Regulatory pressures, driven by concerns over crime and financial stability, are dismantling its infrastructure. Most critically, the rise of faster, cheaper, and government-backed alternatives is rendering Bitcoin obsolete. While die-hard enthusiasts may cling to the HODL mantra, the reality is stark. Bitcoin's value is on a collision course with zero. As the world moves toward a more sustainable and regulated digital economy, Bitcoin will be left behind, a cautionary tale of innovation outpaced by its own limitations. And there you have it, all roads crew. Bitcoin's on a one-way trip to the dump. What do you think? Is BTC toast, or are you still riding the crypto wave? Drop a comment, smash that like, subscribe, and hit the bell for more real talk. Catch you next time.